Hey everybody, my name is Quinn McDaniel. I'm a senior in the AIM program covering sector International Consumer Staples. Today I will be pitching Ardagh Group, ticker ARD. Ardagh Group is a global supplier of sustainable, recyclable metal and glass packaging for brand owners around the world, operating through these following segments: Metal Beverage Packaging Europe, Metal Beverage Packing Americas, Glass Packaging Europe, and Glass Packaging North America. The company was founded in 1932 and is currently headquartered in Luxembourg. Ardagh Group has grown into one of the world's largest metal and glass packaging companies for beers, food, ciders, flavored alcoholic beverages, wines, non-alcoholic beverages, spirits, and pharmaceuticals, while utilizing 57 metal and glass production facilities in 12 different countries while employing over 16,000 people. Just recently, in August of 2021, Ardagh spun off its metal packaging business through an $8.5 billion business combination with Gores Holding B, a special purpose acquisition company sponsored by an affiliate of the Gores Group. Overall, with strong demonstration of resilience in these uncertain times, it is recommended that Ardagh be added to the International AIM Equity Fund with a price target of $34.14, which represents an upside of 31.1%. Moving on to my drivers. My first driver is all about how Ardagh Group completed a merger of its metal packaging business with the SPAC named Gores Holdings V to create Ardagh Metal Packaging, ticker AMBP. They are now a leading provider of sustainable and infinitely recyclable beverage cans. With a stake of 82% in the new company, Ardagh Group aspires to stay a committed, long-term majority owner. Since June of 2021, Ardagh Metal Packaging's operations produced adjusted EBITDA of $612 million on sales of about $4 billion and is on track for a 2021 adjusted EBITDA of around $650 million. By 2024, EBITDA is expected to more than double from $545 million to about $1.1 billion. On to my second driver is all about how Ardagh Group plans to spend about $2.1 billion for business growth initiatives in its global beverage can and glass operations by 2024. The company will be able to expand its beverage can capacity by 21 billion units, which is up 55%, through investments such as expanding their plant in North Carolina, converting a plant in Ohio, investing into Brazil to double their can capacity, and also expand their Europe beverage can capacity through multiple lines. The company anticipates adjusted EBITDA to more than double by 2024, with a CAGR of about 19.7%. And my last driver, which concerns Ardagh Group's leading role in FIVE's Furnace of the Future, which is a project that aims to build the world's first large-scale hybrid oxy-fuel furnace. The goal for this breakthrough for the glass packaging production is to achieve climate neutrality. This furnace would be able to run on 80% renewable electricity and has the potential to remarkably decarbonize the glass production process by about 60%. This project is on track to be built by 2022, with the first recorded results coming after in 2023. By building this large-scale 350 tons a day hybrid electric furnace, sales are expected to increase upwards of 9%. Moving on to my valuation. In order to reach an intrinsic value for Ardagh Group, a 5-year DCF model was constructed using a terminal growth rate of 1.5% and a WACC of 6.38%, which led to an intrinsic value of $32.13. Then, a sensitivity analysis of plus or minus 50 bips on the terminal growth rate and WACC resulted in a $22.68 to $46.58 target range. Secondly, an EV to EBITDA multiple valuation was calculated using a 12.79 weighted average, resulting in a price target of $32.52. Additionally, a price to sales multiple valuation was conducted using a weighted average of 1.75, which generated a price target of $51.41. By finally weighing the models 70, 20, 10, a price target of $34.14 was reached, which was resulting in a 31.1% upside. Ardagh Group pays a dividend yielding 2.3%. Moving on to company risks. As for competitive packaging, Ardagh Group faces serious competition from other metal and glass packaging producers, as well as from manufacturers of other forms of packaging. If Ardagh fails to compete effectively, it can have adverse effects on top-line growth and market share. As for the growth investment program's risk, as the company undergoes significant implementation of a multi-year business growth investment program with the goal of increasing capacity, failure to successfully implement this program can negatively impact the company's yearly shipments and the revenue. And lastly, as capital expenditure cost risk comes into play, Ardagh Group's glass packaging business requires consistently high levels of maintenance for capital expenditures. Failure to generate enough revenue to cover the funding for capital expenditure maintenance can negatively impact business growth. On to the management of Ardagh Group and Ardagh Metal Packaging. Paul Coulson, on the left, has served as the chairman and the chief executive officer of Ardagh Group since 2017. Prior to this role, Paul spent 5 years with Price Waterhouse in London and Dublin while qualifying as a chartered accountant in 1978. The CFO and director of Ardagh Group, David Matthews, has been the CFO since 2014 and previously held various senior finance positions at DS Smith plc and Bunzl plc before joining Ardagh Group. Last but not least is Oliver Graham, who has become the CEO of Ardagh Metal Packaging since the beginning of 2020. Oliver held a previous position as the CEO of Metal Beverage Europe with responsibility for Metal Beverage Brazil, as well as being the group commercial director. Please join us via Teams at 1 p.m. on Friday, September 10th, or the D2L discussion board if you have any questions at all. I look forward to answering all of your questions to the best of my ability. Thank you for listening and have a great day.